makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Adyen shares rocket as the Dutch payments firm beat estimates with increased volumes due to higher consumer spending. Now, we speak to the company's co-chief executive later this hour. Unilever actually beat estimates as easing price inflation encouraged shoppers to buy more products. We'll have more from our interview with the company's chief executive on his turnaround plan. Plus, our exclusive conversation with Carlo Messina. He's the chief executive of Intesa Sanpaolo on rising profit and a new share buyback at Italy's largest bank. So we have a lot of interviews to get through, a lot of the focus, of course, on earnings. But first thing is first, let's take a look at the European markets map. Now, when you look at earnings, it is a bit of a tale of two cities. If you do well, the share price goes up. There's nothing to write home about that. But Unilever is certainly on the upside. And then Crédit Agricole actually a little bit lower in today's trading session. The other thing that people are really watching out for, it does seem investors are looking past some of the concerns that the Fed officials have said on when exactly they'll start cutting rates. They've also managed to look through some of the concerns in commercial real estate, but they're looking at this Treasury auction. This is a 30-year. Now, a 10-year, a 5-year went okay. The 30-year, so longer maturity, could be a little bit more difficult to get through. European markets, you can see the CAC 40 gaining some 0.1%, so a little bit tentative, a bit of a tepid with, of course, these sector moves depending on earnings that came out. Now, to talk about the markets, we're joined by Tatiana Puhan, a Chief Investment Officer at Copernicus Wealth Management. Tatiana, thank you for joining us. When you look at Treasury auctions, when you look at what we've heard from the Fed, and when you look at earnings, what do you think will support the market going forward?
Well, I think it's above all, what central banks are going to do. So very clearly, the current scenario that is still priced in is one where investors really bet on, a high likelihood that, the Fed will start cutting rates in March, which I think is actually not that likely. So we can get some, changes in sentiment due to that. And then also, the earnings picture. In the US, it has come in relatively stable, but in Europe, clearly, we get very weak signals. So let's see, what's still going to happen in the next 1 or 2 weeks. But that is also going to determine to quite some extent, where sentiment is going to move.
So, Tatiana, what are you expecting from the Fed? Again, we've had a number of Fed officials saying that they're just in a bit of a wait-and-see situation. Is this really because the jobs number is, if not incomprehensible, difficult to understand what the repercussions are 2 to 3 months from now?
Yeah, I think it's extremely difficult to understand. And I think, I can also not tell you what is going to happen going forward, as central bankers cannot do, I think, at the moment. Because we get signals, that go in one and the other direction. So you can interpret them as, the labor market being still quite robust and, generally speaking, a supportive kind of environment in the US economy. But you could also interpret it in terms of, maybe things are slowing down. So it's not very clear, but I don't think that central bankers will act on unclear signals. So I think they need more reassurance coming from data, to actually act and to start cutting rates. And so far, the signals are not clear enough so that, I would see them actually acting on that.
Tatiana, one of the other things that actually a lot of investors actually talk about without really actioning is their worry about debt, especially debt in the U.S. and the fact that it could hit at some point a Treasury auction. Is today the day? I know there is a bit of concern about a 30-year auction because, of course, it behaves differently to a 5-year or 10-year. Could we see something, if not today, in the next couple of months?
Yeah, I think, in that respect, also the outcome of the US elections will be actually very, very interesting because, if we get Trump, then for sure, we will not see austerity. So, what is going to happen then? And, what are bond markets going to do then about it? And might they try to sort of show Trump that it's better, that he actually keeps a little bit of budgetary discipline? And so, I think further out this year, also when elections come closer, I think that will have a larger impact on bond markets and bond market volatility.
So what does that mean on where you want to be invested in? So as Chief Investment Officer, what are your top 3 calls right now?
So what we're trying to do is we're trying to play some sort of barbell game. So on the one hand side, we still try to be very much exposed to these kind of long-term growth trends, which we see, for instance, in tech or in tech-related names. So that is one thing that we very clearly still play. But on the other hand, we also try to position ourselves, for the risk that we cannot predict, which is like, the risk of some major political accident happening. And for this, we try to be positioned in assets that, would help us in such a situation, which are maybe related to commodity energies, but also defense sector. And then we also play some themes which are a bit more kind of orthogonal, let's say, such as, long-term energy transition and themes like this.
So, Tatiana, valuations in Europe are certainly much lower than elsewhere in the world. Is that justified, and how do you play Europe?
Well, Europe for us is, of course, a region, where we do have exposure because we have a lot of European clients, but it's something where we have actually a clear underweight since quite some time now, because we believe that, Europe has actually not done its homework for a lot of years, has structural problems, and has a much less dynamic economy. And so while we are selective in, the names that we allocate to in Europe, we kind of prefer to underweight that region because we think that also like the euro exposure is actually not necessarily very favorable to have in a portfolio. And so that's why we stick to a very selected range of names, and we try to overweight US names. We try to overweight also alternative themes that are actually not dependent on pure market beta.
Tatiana, when you look at Switzerland, it is a safe haven. How long can it be a safe haven for? I know there's quite a lot of calls on actually Swiss franc and some of the things that the central bank could put in place.
Yeah, of course. I mean, like Switzerland, I think to some extent we should not underestimate that we are within Europe, and Europe is such an important trade partner for us. And so obviously, if Europe has a big problem, then Switzerland can also not be completely disconnected from that. That is clearly true. Also, the Swiss franc has probably been very much supported, by SNB, by the SNB over the last 12 months or so. So, it remains to be seen now what happens next to the Swiss franc. We think that still the Swiss economy is very robust. We didn't have really an issue about inflation because actually prices have already been quite high. And we also think that, especially the large companies in Switzerland, they have a very diversified and very robust business model. So still, it's probably a safe haven, but we shouldn't believe that we can be completely disconnected, from what happens around us.
Thank you so much, Tatiana Puhan, their Chief Investment Officer at Copernicus Wealth Management. Now, a couple of earnings that we're actually keeping an eye on. ARM, for example, soaring after the chip designer gave a surprisingly bullish forecast, showing that its push beyond smartphones is helping fuel growth and profitability. You can see ARM Holdings 23% higher. Now, coming up, we'll be speaking exclusively to the chief executive of Italy's largest bank as higher interest rates continued to fuel earnings. Our interview with Carlo Messina of Intesa Sanpaolo next. This is Bloomberg. Well, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, two French banks reported results earlier. Crédit Agricole shares taking a hit today as investors look past the bank's net profit beat. Rival Société Générale has vowed to increase revenue by at least 5% this year, and this comes as a chief executive simplifies the lender. Now, SocGen is to return about €1 billion to shareholders this year. Now, from French banks to Italy's largest, Intesa Sanpaolo is announcing a new share buyback worth almost €1.7 billion. That's after fourth quarter results that showed net income rising 49% from a year earlier. Well, I'm very pleased to be joined for an exclusive conversation with the Chief Executive Officer of Intesa Sanpaolo, Carlo Messina. Mr. Messina, thank you so much, as always, for joining us here on The Pulse. Could you give us a sense of first of all, how content you are with the results and how much more you can do and how much more you can give back to shareholders?
No, we are very happy of the results. Obviously, results are sustainable. So what we consider important is that this is a trend that will continue in 2024 and 2025. Another point in which we are very satisfied is that these results include also 300 million of support for inequality and poverty in our country. So not considering this, the total net income will have exceeded 8 billion euro, but it is part of a story of being also an impact bank for Intesa Sanpaolo, and also the ability to continue to give significant remuneration to our shareholders that will continue also in the next years.
Carlo, last year you raised the bank's guidance 3 times, of course, as higher rates are lifting income from lending. What will happen in the next 12 months if rates go down?
So rates going down for Intesa Sanpaolo will be a lever of extra profit in comparison to 2023, because we will benefit of 2 elements. The first one is the hedging on the deposit side. So it's a replicating portfolio that will give us a significant net income. Just to give you an idea, in case of interest rates will remain on average the same level that we are today on average, so 3.3, 3.4, we will have an extra contribution from hedging for an amount of 800, 900 million euros net interest income. At the same time, with the reduction of Euribor, we will have an acceleration in wealth management and protection. You know that we have 1.3 trillion euros of wealth of Italian families, and the acceleration in fee and commissions will accelerate the growth of revenues in 2024.
You have said, of course, in the past, as always, that the bank's cleanup is a priority. What kind of deleveraging trend can we expect from Intesa Sanpaolo?
So, you know, Francine, today we have less than 5 billion euros net non-performing loans. So we are a Nordic bank in terms of risk profile. And you remember that in the past, Intesa Sanpaolo, like all the Italian bank, was considered the problem in terms of non-performing loans. Now we are the clear leader in the market in terms of net non-performing loans. So our risk profile today is equivalent to a Nordic bank, but with the acceleration that we can have from wealth management and protection. Looking at the asset quality, we have no kind of point of attention for 2024, also because we increased the coverage in area that can be problematic. We solved all the commercial real estate problematic that we can have for the future. We solved in 2023, and we still remain with 900 million euros of overlays available in case of need during 2024. So I think that we are in a unique position in the European landscape.
Can you talk to me a little bit, Carlo Messina, about commercial real estate? So something that started in the US this week, there's a bit of concern that actually it's touching or even infecting Europe. How much commercial real estate that could be worrying do you have in the bank?
So we used to have in 2023 2 or 3 significant deals on commercial real estate that could be problematic for the company. One is called Milano Sesto, but we sold during 2023, and now we do not expect any kind of risk in this area. That could be an amount of 1 billion euros. So we are talking about significant exposure, but now it is totally under control. Then we have 2 other positions that we sold during 2023 with extra provisions or devaluation of the assets during 2023, and now the remaining part of portfolio is totally under control, is mainly residential, and with a lot of houses that are under a process of selling from the owner. So our expectation is that in this sector, maintaining a strong focus of attention, obviously, but we do not be in a position to have a negative surprise during 2024.
But Carlo, do you expect some kind of credit event in this space, even if you seem to be telling me that actually the credit exposure of Intesa Sanpaolo is pretty small to commercial real estate? Is that right?
Yes, absolutely. Our exposure is very limited. The portion at risk has been solved in 2023. So my expectation is that in any case, on asset quality, we will not have any kind of surprise during 2024. Our expectation in terms of cost of risk for 2024 is below 40 basis points with a run rate of 30 basis points and 10 basis points available for disposal and further reduction of non-performing loans, because remember, we want to remain a net zero NPL bank, and so this means that we have to continue to make some form of disposal during 2024. But this is fundamental for a bank, because I think that in the phase in which we have very positive net income, it is very safe to have a kind of provisioning that is not close to zero, but remain in the range of 30, 40 basis points.
Yeah. I mean, there's worry out there, of course, about geopolitics, about the strength of German economy. There's worries about politics in the U.S. and maybe some of the tariffs that a potential president could put in place. Do you worry about the prospects for Italy, given all of these uncertainties?
So it is clear that from a geopolitical point of view, we have to consider some point of attention. Especially my point of attention is the relative weaknesses in terms of geopolitical of Europe. So at the end, we should need a Europe in which there should be a Ministry of Economy of Europe, a Ministry of Defense of Europe, a banking union. So all these points are under-evaluated in terms of geopolitical strength of Europe. So USA and China and all the other players can have an acceleration in their ability to be key player. Europe still remain something like a bureaucratic number of countries trying to do their own interests, but not the European interest. This could be something that can reduce the strength of Europe in comparison with the other key players. And at the end, it results in a potential lower acceleration of GDP in Europe in comparison with other counterparties. But looking at the trend also in any kind of negative situation, we will have growth in Europe and also in Italy.
Carlo, can you update us on what's going on with the Russian unit? So, you had said that this was put up for sale. I think there's local media reports saying that there are ongoing discussions about selling this to local management. Is that correct? We are trying to solve. This is the remaining exposure that we have towards Russia. So we have today very limited exposure. It's something negligible in terms of exposure. It is a matter of geopolitical exposure that we remain to have, that is very limited in comparison with a significant number of peers, and for the other significant number of peers, Russia seems not to be an issue. So, but in any case, I will continue to make a disclosure on Russia. Russia is the subsidiary that we have in Russia is a portion that we are trying to make a disposal of this counterparty. There is an involvement of the local management in this transaction and also of other counterparties, obviously. All according not in sanctioned situations, so in something that is according to law. But it is not easy to complete a disposal, also because also in Russia you have some bureaucratic steps that you need to have in this kind of transaction. So for the time being, we still maintain our exposure. In our approach, in difference with other players, is to make the complete devaluation of net income coming from this subsidiary. So in contribution from consolidated level in Intesa Sanpaolo is zero. In other banks is significant. Carlo Messina, thank you, as always, for your time. The chief executive there of Intesa Sanpaolo, actually having a very good week. I think the share price has gained some 8%. Coming up, the Danish shipping company Maersk sinking below deck. In today's trading session, we explain why. This is Bloomberg. Well, Maersk shares plunging after saying it expects a slowdown to global shipping. That's even when a current boost to freight rates from the Red Sea conflict evaporates. Now, Chief Executive Vincent Clerc spoke to Bloomberg earlier.
We've not seen the level of threat actually peak. To the contrary, if you look at how the attacks have developed in the last few days, the zone that is under danger is bigger than it was. The amount or the range of weapons that are being used for these attacks is expanding. And there is no clear line of sight to when and how the international community will be able to mobilize itself and guarantee safe passage for us.
Well, that was Vincent Clerc, the Maersk chief executive. Also, arms soars after the chip designer gave a surprisingly bullish forecast showing that its push beyond smartphones is helping fuel growth and profitability. Coming up, we're joined by the co-chief executive of payments giant Adyen. Shares soaring after net revenue beats estimate. If you look at the share price, I think it's up some 17%. This is Bloomberg. ARM shares surge in pre-market after a bullish growth forecast from the chip designer, helping the S&P close in on 5,000 for the first time. Well, Adyen shares actually rocket as the Dutch payments firm beat estimates with increased volumes due to higher consumer spending. We speak to the company's co-chief executive in just a moment. And Unilever beat estimates as easing price inflation encouraged shoppers to buy more products. We'll have more from our interview with the company's chief executive on his turnaround plans. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the Dutch payments giant Adyen is the biggest gainer on the stock 600 after second half net revenue came in as a beat. Now that's as increased consumer spending boosted the company's volumes. The results offer some relief after surprisingly weak first half earnings. So let's speak to the Adyen co-chief executive Ingo Uytdehaage. Thank you so much, Mr. Uytdehaage, for joining us. I mean, if you look at the share price, it's gaining some 16%. It's a good set of results. What actually made North America your fastest growing market in the second half?
Yeah, exactly. I think it's the outcome of years of building our business in North America. I think the positive thing what we see in our business is that it's basically across all the commercial pillars that we have defined. So we have traction in unified commerce, we have traction on the digital side, but also in our platforms offering. And that leads to a success in North America, where we saw 27% growth in the second half of the year.
Is this a number of customers that you've actually increased? And is it big customers, or were you able to actually increase prices?
No, it's mostly focusing on our land and expand strategy with our existing customers. So we typically work with our largest customers and get more volume over time. I think what we see in the US happening is that more and more customers trust us with their volumes. For instance, if you look at digital, we gained a lot of volume on the digital side, where we worked with our customers to give us more share of wallet, and that makes these results.
So what does that mean for, the trend forward? This was a good set of numbers after a difficult first half. Are you confident that you'll actually be able to build on this and that it's not going to be a stop-start strategy?
Yeah, no, exactly. I think we've always been building for the long term. That has been the strategy of the company since the start. We had indeed a slower half year in 2023. And that's also why we explained during the Investor Day in November how we look to the next 3 years. For 24, we expect to grow in between the 20s and the 30s, and we guided on the low end of the range for 24. So that's how we want to continue to build our business and basically build on the second half of this year.
I mean, outside of the US, do you see any big customer wins in other parts of the world?
Yeah, so if you look, for instance, at Europe, we expanded our partnership with Klarna, which is an important customer of us. But we also continue to work with new customers like S Group from the Nordics, who is everyday retail, and that have selected us because of our unified commerce offering, how we basically can integrate online and in-store payments. I think these are examples how we also grow outside of the US in a very significant way.
So when you look at how much digital spending there has been, you're also a great barometer to try and figure out exactly what's going on with consumers around the world. Are you surprised that there has been an increase in spending in the U.S. given inflationary pressures and given the interest rate environment?
Yeah, like for us, it's always hard to exactly distinguish between our share of wallet gains and how consumer spending looks like. I think if you typically see now at our volumes, we certainly have increased our market share in the US. But of course, for instance, on the unified commerce side, you see that there is a bit of pressure on retail growth. And I think that's also visible in the speed of growth in the US on the unified commerce side. And that's, of course, something that we want to turn around going forward. But we are dependent on the macro there.
So have you seen any kind of patterns of how people are spending changing? Or is it just because of that you're increasing market share?
Yeah, I think in our situation, it is mostly the result of increasing our share of wallet with our existing customers. It's always been our strategy. And that's also what is reflected in our results. If you look at our growth numbers, these are certainly not the numbers how the market is growing. We're growing significantly faster than the market. So that's why we see these results right now.
I know in the past you've said, like, look, you don't really want to join the price fight with some of your competitors. Will that change given the environment you're operating in and also given the increased market share?
Yeah, I think the way how we've always approached this is that we want to work with our customers to bring the best value. So total cost of ownership is an important element how we discuss payments with our customers. And we strongly believe that we can help drive down total cost of ownership. That does not necessarily mean that we are the cheapest in the industry, if you just look at the face value of our pricing. But it means that if you work with us, you get to better results. And that's ultimately where our customers are looking for. And that's also why we are convinced that we continue to gain market share in this indeed very competitive market. But customers are willing to pay for value. And I think that's what we're bringing in this market.
I know there was a little bit of shockwaves across the industry when PayPal, of course, announced that it was reducing the workforce by a significant amount of number. I think it's 9% of the workforce. Is that going to be a concern for the industry, worldwide? Is it something that you need to consider as well?
Yeah, if you look at our strategy, we have invested in a team over the past 2 years, which was quite counter-cyclical. I think we also got a bit of pushback from some people on it. But we feel that we're ready for this next phase of Adyen. So we have the skills and the skill now to help our customers on a global basis. And also for this year, so for 24, we expect to grow the team with a couple of hundred people. So we will certainly continue to invest in our team, mostly on the engineering and commercial side, and also mostly outside of Amsterdam, where we were originally started the company.
Yeah. Ingo, when you look at your, pretty sizable big customers, is there an industry that you want to target this year? Do you have something in mind? Is there an industry that you think you'll be able to pick up customers easier?
Well, I think the beauty of our business, and I think where we are right now, is that we see many verticals where we have traction. So whether that's on the digital side, also what you see reflected now in the numbers, where we have a lot of traction with a couple of fintech players, where we see a lot of traction on the unified commerce side, S Group as an example that we just discussed. But also on the platform side, a lot of our software as service providers, they see embedded payments as a core of their proposition. That's the starting point. And then on top of that, we work with them on innovations, including what we can do with our embedded financial product portfolio, what we can do with issuing, what we can do with capital or bank accounts. And this is really where having an integrated offering, including our banking licenses in different markets, is going to help us to grow. So I think my summary will be like we are very well positioned in multiple industries and in multiple markets. And I think that's also why we strongly believe that we can keep the growth that you have seen.
Ingo, thank you so much for joining us today. That was the Adyen Co-Chief Executive, Ingo Uytterhage. Now, coming up, I speak to the fashion entrepreneur Emma Greed about diversity, inclusion, and her really journey to success. That's next, and this is Bloomberg. conversations that matter, the insights you need. This is A Pulse, and I'm Francine Lacqua here in London. Now, the Kardashians have built a multi-billion-dollar fashion empire, but central to their success is a British businesswoman. Emma Grede is the chief executive and co-founder of inclusive fashion brand Good American. She's also a founding partner of shapewear label Skims. Now, the entrepreneur spoke with me about her rise to the top, how she measures success, and why diversity remains elusive in the world of fashion.
I don't want my daughters wasting time thinking about how much they weigh, what they look like, and I think that fashion has done a terrible job of reinforcing a really unrealistic beauty ideal. And so with Good American, the whole premise of the brand was to say, we're going to make clothes for all women, we're going to let women make their choices, and hopefully we're going to take some of that pain out of what it means to be left out of the conversation or not represented in fashion. And we've done that pretty well, I think.
So, Emma, you have this idea, right, of inclusivity, of making women feel good.
Mm-hmm.
Who do you talk about it with first?
Funnily enough, my husband. You know, because I think that we're both entrepreneurs, and so it's natural for me to bat any idea backwards and forwards with him. But, you know, I've worked for years in the fashion business, and so I've been part of the problem, right? It's like I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
And I think this is a pattern with a lot of entrepreneurs or successful companies. Is there a danger that, you know, some entrepreneurs look at numbers too much and look for, you know, a gap in the market where
It's very true. It's very true. And I think that's one way to approach things. And there's a certain sense. But for me, you know, I go with my gut. And gut instinct tells me a lot. And I tend not to go against my gut. Now, I'd be lying if I said I didn't run some numbers and feel like there was commercial opportunity here, right? Nobody makes 19 sizes of anything without thinking, I reckon I can sell them somewhere along the line. But I definitely think so much more of what I've done throughout my career has been in response to a feeling that I've had and then acting on that feeling.
Were you surprised at how many other people felt like you?
Yeah.
Were you?
Yeah, honestly, I mean, it's one of those things that, like, on paper, Good American has been such a massive success. But if you wind back to day one, everyone's like, you sold $1 million in day one. The truth is, you know, 9 o'clock I was the hero. By 11 o'clock I had no stock left, and everyone was like, you have no idea what you're doing, do you? And I was like, no, actually I don't. And in a way, that was my first lesson in what it means to be excellent from a customer experience point of view, because I just started emailing people and I was like, how long do I think people will wait? Turns out not that long, certainly not as long as it was going to take me to make stock. I was emailing customers. Well, both, actually. I was like, can you help me get some more fabric? Will you wait 8 weeks for a pair of jeans? And somewhere in that, it all kind of worked out. But I think, again, what people respond to is brands that have authenticity, and there's a level of honesty that's needed. And I went and said, you know what, we had no idea how popular and how much this was going to chime with customers. And if you can just be patient, we're going to get you something. Hands up, we know we messed up and we don't want to disappoint you. And there's a part of that honesty that actually really chimed with people. They knew that we weren't feeding them the line. It was clearly not written by a PR, because I couldn't afford PR at that point.
Were you signing Emma?
Oh yeah, like lots of love, Emma X. You know, how I'd you know, speak to my mom or something.
Has fashion done, I mean, it hasn't done enough when it comes to inclusivity and diversity, but has it done something in the last 5 to 10 years?
Well, you know, it's interesting because fashion, as quick as it is to change, like in the kind of aesthetic, it's very difficult to change a system, right? And I think that that comes down to who makes decisions. And the people that make decisions in fashion don't typically look like me. They aren't typically women all the time. When we look at who's at the helm of the biggest high street players, matters. It tends to be the same type of people. And so I honestly think there's a lot of work to be done. Progress has definitely happened, but you only have to look at the last New York Fashion Week, which is the biggest and the most commercial, to see that, there's so much tokenism around what inclusivity really means. And I think that, especially when it comes to size, we're back where we were 20 or 30 years ago when you'd have one single black model that would walk down the catwalk. Now we're in that same situation where, I can't remember the stat, but I think it's less than 3% of models that came down the catwalk were above a size 12. I mean, a size 12 is less than average. And so there's just so much work to be done there. And size is the last allowed taboo. We're allowed to disclude people because of their size, and it's really crazy.
But do you worry the impact this has on society, because it's through social media? So actually what was in the realm of fashion maybe 10 years ago is now pervasive with, our girls, our sisters. And so I was reading something saying, people feel a bit rubbish when they look at all this stuff because they don't feel represented and they feel that there's something wrong with them.
Yeah, and that's the whole reason I started the brand, because, if you go back 7 years ago, I was pregnant with my second child, a girl, and I really felt that deeply, how much time and effort you can spend and waste time. And to me, it's if you take out some of that, worry and the strife around how much we think about our looks and instead put our energy into saying, I need a pay rise, I think I should be doing something else with my life. Part of it was really what happens if you shift and change the paradigm of how people see themselves? And, it's a really trite sentence, but representation really matters. When you see a version of yourself in something, there's a level of acceptance. And that's what I wanted to do, just level the playing field and say, you know what, we all look different, we all are different, and that's okay. That is not what we should be thinking about. We should be thinking about, equal pay. They're the things that we should use our time for as women. Let's just get an equality going with men. And that I mean throughout the workplace, throughout all of the industries. And honestly, I feel the media has such a huge impact on us. And I don't mean just fashion media, I mean the media at large. And so we need to see better representation everywhere in society.
Is that why you're doing Dragon's Den?
As I've got more successful, I thought a lot about what it means to be an entrepreneur, because they talk about it being really small at the top, but it's not small at the top. It's minuscule. It's the same people doing the same deals, giving each other money, who all typically went to one of 5 or 6 schools. And so for me, because I'm on Shark Tank in the US, and the idea of Dragon's Den, and that you could be an entrepreneur with seemingly very little background and absolutely no access to funding and walk on and get a check to start to do something that means something to you and that can mean something for your family. I'm why wouldn't you? It wasn't so long ago that I was out fundraising. And so I'm just if I could be a small part of somebody's journey that wouldn't usually get the opportunity, to me it just makes so much sense. And it's not just about women, not just about women of colour. It's if you didn't have the means or the education to know anything differently than getting up and going to work every day, that doesn't mean to say you can't have a successful business.
And you can watch the full interview with Emma Green on Leaders with Lacqua later this month. And she's also actually on Dragon's Den this evening. Coming up, we hear what the Chief Executive Officer of Unilever has to say after the company returns to volume growth. We talk deodorants, magnums, mayonnaise, ice cream. That's next. And this is Bloomberg.
We are actually preparing for everything. Our industry is a fantastic industry, but it's also a challenging industry. We face challenges all the time. And fundamentally, at the end of the day, for us, the focus is innovating. The more challenges we face, the more, in the end, we have to focus on innovation and do it faster and better. And that's to the benefit of patients, ultimately.
Well, that was the AstraZeneca Chief Executive Pascal Soriot after the UK drug maker reported lower than expected profit and a forecast for this year that failed to allay concerns about margins. Now, they're also clinching deals to enter new fields like weight loss. And the maker of the iconic Magnum ice cream, Unilever, reported 4.7% sales growth in final quarter of 2023 as easing price inflation encouraged shoppers to buy more. But challenges remain, of course, for their flagship ice cream business, just as weight loss drugs are changing the appetites of consumers. Now, we spoke to the Chief Executive Officer, Hein Schumacher, a little bit earlier.
A difficult year. Many reasons. What we've done is we've appointed a new leader, and since then we've acted very, very fast. So appointed new leader, roughly 80% of that leadership across the business group has been changed. We're looking for strong productivity improvements. We're looking for transformation in some of our supply chain areas to improve the overall system. And we're making bigger bets on some of our core brands. You know, we should say, I mean, ice cream is probably the most premiumized portfolio that we have. So, you know, going back to your earlier question, if you think about inflation, that has hit ice cream over the last couple of years. It's a discretionary category, and consumers have dialed down a little bit in that sense. But hey, that's not an excuse. Going forward, we should improve, and we've taken measures, and we're executing against them.
There's one company that's a bit of a star of the show at the moment in Europe, and that's Novo Nordisk with Ozempic. Does that make your life difficult?
No, I mean, I saw, of course, the stellar performance of that company, and lots of talk about it. But if you look at our nutrition and portfolio, we are primarily about taste elevation, you know, with sauces and condiments and cooking aids such as Knorr, which is our second biggest brand. And you know, these are relatively small, quantities. They're not so much in that field. So I think our portfolio is quite resilient from a foods perspective. Hey, we're watching it obviously very, very closely.
I mean, I think the chief executive of Novo Nordisk told us that actually he had a number of food chief executives call him to ask for advice.
I didn't call him.
You did not call?
No. Well, as I say, you know, you can never close your eyes on any development that's happening. I think it's very intriguing, but at this point, we're cruising forward. We're not seeing an impact in our business from that, and I believe our portfolio is a bit more resilient to those developments.
Well, that was the Chief Executive Officer of Unilever, Heinz Schumacher, speaking to me earlier as the consumer company returns to volume growth. Now, a couple of other stocks actually we're watching ARM soaring after the chip designer gave a surprisingly bullish forecast, showing that its push beyond smartphones is helping fuel growth and profitability. Then Walt Disney reported adjusted first quarter earnings that beat expectations and gave a full-year profit forecast that is seen as strong. Now, the company also boosted its cash dividend and said it targets $3 billion of repurchases in 2024. Then stocks and bonds posted small moves today. Investors again grappling with a slew of company reports and prepared for a sale of a 30-year U.S. government debt. Now, there is a lot of speculation, of course, of what this means. We did have a successful 5-year auction, a 10-year auction. A 30-year could be a little bit more tricky. So this is really seen as a bond sale test. Again, I guess because it's a 30-year, so the longer maturity debt could prove a little bit of a tougher test for investor appetite. It's very clear that on the week, markets have largely shrugged off fears around commercial real estate sector, and also seem to have absorbed so far a run of warnings from Fed policymakers that a cut is not likely until May at the earliest. We're talking about the Fed. Up next, it's Bloomberg Brief. Danny Berger and Manus Krani, both from New York. This is Bloomberg.